Hello everyone and welcome to Insure Talk, and today is a really special day. It's our 5th birthday. 5 years ago, almost to the day, we recorded the first Insure Talk. I wasn't part of that, but it was something truly special. It was when the world went quiet and we had time to think about things. And for me personally, it was a very special time because we started working remotely and I have never gone back to the office. I spoke to you last month about our remote working model. And since this day, the 14th of April 2020, Insure Talk has been a constant in the lives of people attending our episode here today, this virtual roundtable, this community of people who all work in the insurance industry. And I am so honored to be here today to celebrate this incredible milestone. We'll hear from Llewellyn a little bit later. He is the brainchild behind Insure Talk and works very hard to bring all of this wonderful stories of our industry to you each month. So we're going to make it a bit interesting a bit later, but I just wanted to say happy birthday, Insure Talk. I can't imagine our industry without it anymore. So today we don't have a specific headline sponsor, but we do have an event partner, Global Choices. They always come and assist us with their support, provide sponsorship and wonderful speakers as well. But our theme today really is just Insure Talk's 5th birthday and celebrating this unbelievable industry that we get to spend time in and grow our livelihoods. And first up today, we have Patrice Moyal talking to us about navigating market volatility, what it means for long-term investment portfolios and insurance clients. Patrice is the CIO of Visio Fund Management, and as always, I've been very privileged to be a speaker on this on Insure Talk itself, and I know how tough it is to prepare for this because you are speaking to 4,000 people, not just around South Africa, but some of you are attending this virtual conference from abroad. So I'm going to tell you a bit about Patrice. In the markets for 28 years since his first introduction to fund management at Liberty Asset Management in 1997, he founded Visio Capital in June 2003, so it's a well-established business. And previously the head of Corp Capital Bank's hedge fund operations, where he managed the group's hedge funds from January 2001 to May 2003. He completed his accounting articles, joined Mercantile Bank in 1995, and attained the position of Senior Manager of Finance and Administration, Retail Banking. And on this specific topic, Patrice has had a fantastic career, CIO, as I said, of Visio Fund Management. We're starting today because on everyone's lips is the topic of the impact of the tariffs from the United States, the US going on a trade war, which we've only really many of us have learned about in our studies, and how this is going to impact on our investments. So Patrice, tell us all about it.
Christelle, firstly, thank you very much for the introduction, and really an honor and a privilege to be participating in your 5th year anniversary, and congratulations, and to many more. And clearly quite a really innovative forum, and as I always say, nothing ventured, nothing gained. So congratulations, well done. So as you said, Christelle, I'm going to share a presentation and I will keep within the 25 minutes. I know you've got a very busy schedule. So I'm going to find it right now. There it is. And I'm going to put it into presentation mode so that you can all see it. Okay, can I just confirm that it's clear? I think it is. So I'll be fairly brief on Visio's background so that I can concentrate a lot more on really addressing the topic, because it's obviously highly relevant, or always is highly relevant, how to navigate these markets, which are never dull. So first and foremost, Visio, as I said, as you mentioned, it's now 22 years old this year in July. We've got fair amounts of assets under management across different platforms. Our history is hedge funds. I was one of the co-directors of the second hedge fund in South Africa back in '98. We were at Peregrine. So we've been really in hedge funds a very long time. And one message I want to bring across really about hedge funds. Hedge funds is about managing risk. You talk about managing and navigating volatility. You know, for hedge fund managers around the world and everywhere, in South Africa, it's not so much about outperforming, it's more about managing the downside and preserving capital. Because if you avoid losses or avoid as many losses as possible, you'll tend to outperform just by actually, you know, the cost comes with the losses, not so much the gains that you make. It's how many losses you can avoid. And I can't make that point, emphasize that point enough. We've got very good shareholders in the Metropolitan and Royal Bafokeng from 5 years ago, and the rest of the equity is held by the staff. This is what we all look like. I'm going to go through this very quickly. That you can see there's really a range of qualifications. You know, we're a very diverse bunch of people. We have, I travel a lot overseas now. We have one person in Florida. We have one in Australia. And the rest of the team is split between Cape Town and Johannesburg. In terms of this is what it looks like, who does what within the team, but it's all very much consensual decision-making. That's the very important thing. We tend to believe that if you have to be a good fund manager, you've got to understand all the various products. You can't be just sector-specific, just worry about property for argument's sake, or worry about mining. You've got to be able to weigh a bank versus a retailer. Is Foschini a better bet than Absa at a point in time, for example? Again, this is all our pretty pictures. We had a good year last year. We won a few awards. And I think the important thing here is the one that I want to concentrate a little bit on today is the multi-asset, because that's really what gives you a variety of different investment risk profiles within one fund. That's the middle one. We won the 5-year award for the best flexible fund. And that's really talks to the fact that if you adopt a flexible mandate, you don't worry so much about consensus, about the market's view, but really it expresses our own views of what we consider the best opportunities at any point in time. We encapsulate that within a flexible mandate and within our balanced funds. And our hedge fund last year was also the best hedge fund in 2024. And our fixed income guys did a tremendous job. Johnny Marson is a doyen of fixed income and really drives our allocation strategies and our balance funds. And that all helps us navigate these crazy markets. Again, I'm going to emphasize this point: protect your capital. And I'm stealing a quote here from Warren Buffett. You know, the first rule about investment is don't lose money. And the second rule is don't forget the first rule. And it really permeates across how we do things. It sounds easy to talk. It's not easy to do. And we do make a lot of mistakes. But you'll see why later we are able to navigate through markets by virtue of the actions that we take. And not just, in a sense, wing it by saying, well, our investments are less risky. There's a lot you can do within your own framework to actually manage that risk as best as possible. Just by way of I suppose, to depict the lay of the land, one of the most important measures that we look at is the 10-year Treasury. The US 10-year Treasury bill is a very good risk measure of global sentiment, because the US T-bill is considered to be one of the safest assets from investments purposes. Currently at 4.3%, in essence, you're earning 4.3% for 10 years if you buy the US T-bill. When Trump was a bit more in favor, it was around 4%, meaning that you would be accepting lower returns in order to invest for 10 years. Now the rate's gone up by 10%, meaning there's 10% more risk concern than there was when Trump first took over. So it's a good measure. It's why also the US needs that rate to be as low as possible. In order to do so, they've got to do a whole bunch of things, and obviously not scare the whole world with tariffs. But on the other hand, they've got a very big debt problem. If they can address that debt problem, if Musk and his team, and if Lutnick Howard Lutnick, Secretary of Trade, actually on the other side generates more income, more business activity, more taxes, you could find a situation where the US actually gets their act together and in 4 years' time they balance the books. If they balance the books, the US Treasury bill could be 3% or lower, meaning people will be borrowing cheaper. There'll be more borrowings, properties will go up, mortgages will look healthier, and then you've got a very healthy economy. So there are strict, you know, the 10-year T-bill gives you a good measure. If it's not something that you kind of look at, if you want to gauge world markets from your own perspective, put on your radar, put on your watch list, put on your Bloomberg, whatever it is, Reuters or anything on Google, just monitor that 10-year T-bill. It's a very good way to monitor general global risk appetite or aversion. So that's what we're going to navigate, I guess. Our balance fund is, I'm just showing the slide to show you how it's diversified. And as I said, it encapsulates our best way to navigate, our best expression to navigate these markets. It shows you that we've got 46% of the fund in JSE listed, but be careful, it's not all domestic. In fact, more than 60% would probably be offshore related because the JSE is so exposed overseas, even though it's South African listed shares. Our offshore exposure is roughly 20% in shares. It's towards the lower end. We've obviously been a little bit cautious, but then we really like what we own. Domestic bonds are so generous in terms of what they're offering right now. It would be silly to ignore. Domestic property also yields, you can get 10% in really good domestic REITs. And then our offshore bonds are also fairly generous at the moment. But we are a little bit circumspect because Euro rates are coming down, UK rates are coming down. There's a good chance that the US rates will also come down. So it will just narrow the opportunity in terms of offshore bonds. But there is potential capital appreciation at this point. So this gives you an idea that it's a fairly well-balanced approach. Obviously, it still comes down to how we pick things that go in here. And that, again, talks to, putting our best foot forward at any point in time. This is a great vehicle from which to do it. Another way, I'm not going to hammer you with too many graphs. I don't like too many graphs either and stuff, but this gives you an idea through the balance fund now. In the bull months, okay, we are the blue. In the bull months, we actually done quite well in the balance fund in terms of doing a bit better than the market. Traditionally, a hedge fund doesn't do as well when markets go up, but they do tremendously better when markets come down. So we've actually, in the 6 years since we launched the balance fund, we've actually done okay within up markets. We've done very well in terms of down markets. You can see that we, on the average, the markets have lost 2%, we've lost 1%. So we've done decently in terms of mitigating the downside. And that's really, the middle bars are the most important for us. You'll see in a hedge fund, it's actually even more pronounced. And that we don't perform as well in bullish times. So when everyone's happy, and this is since November 2006. This is our retail fund. Our oldest fund is 22 years old. This one is 19 years old. And this is the one we picked for the retail client base. But the important bars are really the middle ones. And how we are able in down markets to not lose money, but almost not lose money. Now, we don't do this by design. We do this really by virtue of what we put in the fund and how we put the whole package together. We have shorts. In other words, when markets come down, some shares come down, and we would have made some money because we have shorts in a hedge fund. You can have shorts. So this is really, for us, the most important, one of the most important slides that I would want to convey is navigating crazy markets, manage this middle section. Don't lose too much money. And then after that, your compounding effect will be such that you'll generate really good returns. I haven't put the fact sheet for this one. This is not about us, but I just want to explain to you the benefits of navigating and managing downside. Again, the visual fund, this is the correlation to markets. It shows you how uncorrelated we really are. Most funds, benchmark funds, will be highly correlated, one time correlated at least. We are completely uncorrelated. In other words, it doesn't really matter what markets do. as a fund, will tend to behave very differently. So it gives you a nice avenue to manage people's money in a less correlated fashion, and obviously look for capital return. So let's talk about where we're finding opportunities and how, for us, this is navigating through risk. We like a bit of gold. I think it's very important. We can't call it. Rather just have some, but don't bet the bank, because it can be very volatile. Process is Tencent, it's China. It's crazy to think that more than 15% of the JSE is actually driven by Chinese media gaming play. But thankfully, Chris Becker invested $24 million in 2002. That's worth a couple of trillion rand now. So it just shows how phenomenal that investment has been for South Africa, for South African pension funds. And buying Process, you're still getting that 10-cent exposure at a very, very deep discount. Some other examples, we've got what we call special opportunities, and I'll talk to that in a little bit of detail. These are special only in the sense that there is a value from within, irrespective of what Trump does, irrespective of what happens in Ukraine, irrespective of any other global factors. There is value that can be extracted from within. Renet is a massive opportunity. It has a stake in a UK business called Pensions Corp. They do transfers of defined benefit plans, defined benefits into products, taking that defined benefit liability away from the corporates in the UK. It's a massive market. There are a few players who do it. We've invested in 3, and Renet is one of those. It's Johan Rupert's investment vehicle. Half the market cap is cash. The rest is largely the investment in the UK business. Metropolitan, we invested 3 years ago. The stock has doubled, but it all comes down to what management actions, what management's done to unlock tremendous value within a business that doesn't grow very much. SAPI is another one. We are still losing a little bit of money on this one over 12 months period, but there is tremendous value to be unlocked here. It trades at a significant discount to international peers. Being listed on the JSE does no justice whatsoever. Great assets, unique assets, all 3 together are worth way more than the share price. So it's how do we unlock that value? Last week, this is not really public knowledge, but last week we sent a letter to the board. It's the first time we're actually announcing anything in public about it. We do a lot of letter writing to companies. We don't go public about it. We won't put that out in the press. We want to work with the board. SAPI has 50-60% upside, if not more. The board needs to take cognizance and actually take action. So these are special opportunities. You wouldn't find typical portfolios holding some of these in size, because a lot of fund managers just want 1% in something, whatever. We will concentrate portfolios and really focus where we see value unlocks. So I could go into each one in quite a lot of detail. Invicta on the bottom left is very interesting. It's only a 3 billion market cap. The company has bought back 10% of its shares in 2025 alone in the market at 32 Rand a share. The tangible value of all their assets, excluding any intangible, goodwill, whatever, is 52 Rand. If they sell the entire stock, collect from all their debtors, the value of the company is 52. The share's trading at 32. It's a no-brainer. And manager, the CEO himself, bought 9 million Rand worth of shares for himself this year also. And the company's bought back 10% of their shares. If the company's buying back their own shares, we should seriously be buying their shares. We should seriously be owning their shares also. It's a great vote of confidence. So it's very much in our portfolios. We see value. We see the potential for the company to delist. If not, the share price will reflect in time what it's really worth. So these are just examples to, again, concentrate on finding these alternative assets, and I'll talk about it here a little bit, the alternative assets that will give you those returns in difficult periods. Renet, Alexander Forbes is another one that really shouldn't be listed anymore, generates massive amounts of cash. There are only 2 real shareholders left. We are one of them, and PRC. The rest is very small, and then 85% of the shares are spoken for between 2 controlling shareholders that are not going away. So there's no free float anymore. Great business, generates mountains of cash. So we're engaging with the board on a very friendly basis. We're not in a rush. They don't delist. Great returns in the meantime. These are, and it's public, well, not public, but we put these out in our presentations. This is just a list, and there are quite a few more where we've engaged over the years with boards in letter writing, in direct meetings. Sometimes it's to encourage them to take action to unlock value. Other times it's we don't believe that management is well incentivized, and if they were better incentivized in the right manner, they would take action even more favorable towards shareholders. So it's really trying to see if we can unlock value, gauge boards' willingness to unlock value. And if you can get them on the right side, if you can make them realize that there's value here, sometimes you have to raise governance issues because there are too many friends on the board, and therefore nothing happens. Then you've got to put the ball in their court. You've got to really kind of not embarrass them, but make them realize they are answerable to outside shareholders. That is, and we are answerable to our investors. So we really are acting on behalf of our investors here and getting value unlocked. So these are some examples, some great letters we've written over the years, and it takes a lot of time, a lot of homework. Sometimes we incur legal fees in doing so. We're currently busy with one now with legal fees, but we think it's the right thing to do. These are just some of the letters we've written. We went above radar on Northern 2 years ago. We didn't want them to do a deal to buy RB Platts, and essentially they actually walked away from the deal. Northern price went up. It was a successful, above radar form of activism for us. But generally, we don't try and antagonize boards. Give you an idea of how you can make money if you kind of do the right thing and not get too carried away. MTN has had many issues over the years. In our hedge funds, at one stage, we were short. They were generating no cash, paying huge dividends, massive problems in Nigeria. Share price dropped from over 200 Rand down to 180 even at COVID, or 45 at COVID. We didn't buy them back that low. But we bought them back, and then we rode the long route for a little bit. The stock went up again. And then we found that there were big issues in Nigeria. There are still big issues in Nigeria. And the share price, so we sold. We went short again, and then more recently, we bought back our short with a tariff situation, and we've gone slightly long. So these are the nuances that you can do with certain shares over many years. Momentum, just to give you an idea, you may think it's, it's momentum and why get excited, but if you buy it at the right price and you understand how cheap it is at a certain point, and really if management do the right things, even if the company doesn't significantly change what it does, and in fact, it hasn't significantly changed what it's done, but look at the share price relative to the others. At a base of 100, when we bought 3 years ago to now, we've done 235%, including dividends. The others have done, I've gone back. None of the others have performed as well. And it just talks to how management can be so influential in turning around even some of the most boring things. And that's, for us, we like boring when management's going to take action. Advotech, to explain something else, we're not big traders at times. I've been invested personally in Advotech for 20 years. But at a base of 100, when we put them more substantially in the funds, we have had a compound return on private education in South Africa of 18% per annum. I challenge anyone to find me an investment that can compound at almost 20% per annum. Private education in South Africa has been a tremendous and still remains a tremendous place to invest clients' money. Again, it's talking about navigating through volatility. You find good mom and pop investments. So those are some examples. We've included modeling around Invicta, why we like Invicta. So if you see these slides, we can make them available. You'll realize how much value sits. There aren't a lot of Invictas in the market, so it's never going to fill up a massive portfolio, but we don't mind given our size. Fairvest, we were instrumental in unlocking value. I'm going to run out of time soon, so I'm going to move on to the international. But there's, again, some of our slides around some more domestic South African stocks and why we like them. In terms of offshore, and it's a big market, I'm not going to go into everything. I've got 5 minutes to kind of give you an idea. There's a lot of science here, even though it looks like a bit of a mess, but there's a lot of science in how we populate our international portfolio that feeds into our balance funds. And many of these stocks are held individually in the funds, not even direct through our international fund. But in essence, we look for interesting themes. So we bought Boeing recently, the most interesting, and Boeing was up 7% yesterday on the back of good results. Why Boeing, for example? And that will talk to our thinking. Boeing has an order book of 6,500 commercial planes alone. That is worth $420 billion. Almost $500 billion order book that will take 15 years to fulfill. The only other competitor in the world to Boeing is Airbus. Boeing has had a traumatic time in the last 3 years, to the point where they ran out of cash and they had to raise $20 billion last year in November. We bought into that capital raise. The stock dropped a bit more. We took a little bit more. So you can never call the bottom. In fact, you'll know you called the bottom only 2 or 3 months later at the best of times. But Boeing has an incredible brand, a product that everyone needs. It's already in everyone's fleet. If you can't buy Boeing and you tell them, I'm not going to buy your plane, you're going to have to buy Airbus. Both Airbus and Boeing cannot produce enough planes. When the Chinese said last week, well, we're going to cancel some deliveries of Boeing, the Indians stepped in and said, no worries, we'll take those Boeings because we've been waiting 2 years for ours. So that's the kind of thing. So we're buying a turnaround opportunity. Boeing had good results last night. They're meeting production targets. Their cash flows are improving. Their working capital balance is $80 billion. They've got $80 billion of inventory between it. Planes that are half built, totally built, not sold, in parts, etc. Debt sits at around $70 billion. So it's not a company that's ever going to go bust. And it's a strategic asset to the US. So there's one that we believe can double in 3 years. You know, that's navigating. Notwithstanding anything, you're going to need those Boeings. You can't disintermediate the Boeing with AI either. People do travel still. So these are some ideas. There's plenty more. The South African ones, we also populate in our offshore fund because why not? We invested in Japan 2 years ago on the top right because there's tremendous value locked up in Japanese stocks. If we think our governance wasn't great, you must see how poor the one it was in Japan 2 years ago. The Japanese stock exchange took a view, enough is enough. They have to break up these conglomerates. By virtue of that, there have been a lot of companies blacklisted, and everyone has had to put a plan forward as to how they would unlock value within their companies. We picked 10 small caps in Japan 2 years ago. Two analysts did the work. We're now left with 4 or 5. We had one that returned 70% this year alone, which was about not even 1% position, but it's nice to have. Lovely to have these little winners. And then maybe just in Europe, also very excited about there's some cheap banks. UBS, Societe Generale are both very cheap, much cheaper, half the price of our South African banks. And why not do the homework? So we did the homework and we thought, well, there's not a lot of downside here. UBS is the last remaining bank in Switzerland. They really can't go bust. And Societe Generale is the second biggest in France, and it was just tremendously badly run, hugely inefficient, and just it doesn't matter what happens globally. Societe Generale has enormous potential to unlock value from within, and we've seen it so far. We pay 29 to 31 euros a share. They are at 40 euros now. Great returns for something that's seriously very boring. But it's all about value unlock. Vivendi is another one, trades at a massive discount to all the things that it owns. It's silly. Management sometimes are quite arrogant, but we don't mind that arrogance if we see that at some point they will unlock that value. So it's all about navigating risk, as you call it. It's saying buy shares that limit how much risk, how much downside we are about to incur. I'm going to stop at this point. I could go on for hours about what we're excited about, but once again, honor and a privilege to be presenting today. Thank you very much and wishing you all of the very best. Thank you.
And this month we're quite fortunate because we have so many public holidays. I think we have 5 weeks of four-day work weeks, so it's actually like a nice trial session for us. And we're doing things a little bit differently this month because it's our birthday and 5th birthday, as I mentioned earlier. So first of all, the show is going to be a little bit shorter than we normally have, and we've moved the agenda around a little bit. But The next speaker is someone that we know really, really well. She's with us every single month, Thokozile Mshlanga. And I want to do a proper shout out to her this month because we always say wonderful things about her, but we are so excited. We like to celebrate women here at Insure Talk, and we like to celebrate power women, and Thokozile definitely represents that. She was announced just in the last week or so as she's been recognized as a woman of stature in financial services. It's a very prestigious accolade, and it highlights her dedication and impactful industry contribution to the industry. And I want to quote Thokozile. I don't know if she's going to say something about this in her upcoming insert, but she said, "This recognition reminded me of the work we do at the IISA, that's the Insurance Institute of South Africa, and the impact I have had in people's lives throughout my career. This achievement wouldn't have been possible without the support and collaboration of so many individuals in the insurance industry and the financial sector. We are professionalizing the industry and creating a pool of skilled individuals to take the industry forward." And I cannot agree with Thokozile more. She has done an absolute superb job of working towards a more professional industry. So, Madam CEO, over to you.
Good morning, ladies and gentlemen, and welcome to the 5th Insure Talk. Looking back at 2020, this initiative could not have come at a right time. It gave us an opportunity to connect with each other during the hard lockdown and also to learn while we were stuck in our homes. Over the years, you can agree with me that it has evolved and has grown from strength to strength. The content is enriched. The interactions are amazing, and big congratulations to the Insure Talk team. You have done well. As I say, we are committed to this partnership and collaborating with Insure Talk for the betterment of the industry as well as professional development. So well done, well done. I'm now going to move over to sharing with you our 2024 results. We recently finalized the 2024 audit, so I'm going to share a few key highlights of the audit. The 2024 financials indicate that the Institute is in a strong financial position, and that is made possible by various income streams such as the leadership and skills development programs that we continuously deliver to the industry, membership income which has been growing steadily in the last 2 to 3 years, corporate partners, we've been able to secure new corporate partners, and we've also been able to retain the corporate partners that we have had for years. And lastly, what we are able to generate from conference in order to make it possible every year. Moving on to our total assets, we recorded a 22% growth in total assets, and this growth demonstrates our expanding operational capacity and financial strength. Our reserves grew by 19%, again reinforcing our financial stability and providing a solid foundation for sustainable operations. And all this is in line with our reserving strategy that enables us to make sure that we are always correctly positioned from a reserving perspective, so that that fund is able to sustain the Institute in a worst case scenario where there isn't any income coming to the Institute. We also recorded a 20% growth in our cash and cash equivalent, and that is just an indication of our effective cash flow management. Our solvency has been stable in the last 5 years. The liquidity did decline a bit in 2020, but since 2021, the liquidity has also been increasing to acceptable standards that we appreciate and prefer. This, ladies and gentlemen, these results are not made possible by only myself and the executive team at ISA. It is made possible by each and every team member within the ISA family. So I want to say a big thank you to my ISA family. Your dedication, your commitment, your professionalism to making sure that ISA remains relevant to members, to corporate partners, to all stakeholders and the industry at large. I'm truly grateful to have such a committed team that buys into the vision that we have as executives, making sure that we deliver what the industry requires from us. A big thank you, team. We recently hosted a member feedback survey where we shared with the members and non-members that had attended the outcome of the 2024 survey. It was great to have such an engaging conversation with the attendees. We even had the opportunity to get feedback on the spot. And it was also pleasing that we were able to share our plans to improve the areas that have been identified as areas of improvement and our plans in maximizing those areas that the members felt we are doing well. So thank you for taking the time to attend that session if you did. We appreciate and value your input, and we can only become better at it with your support. The cohort 3 of the Youth Accelerator Program will be starting in May. And a big thank you to ABSA Insurance Company for helping us make this cohort possible. This program, as I've previously shared, is focused on creating a pool of skilled professionals from which the industry can recruit from. It is intentional in nature to make sure that we plug the gap, the skills gap that we keep talking about. It is focused on empowering the young people with skills, insurance skills, technical insurance skills that will make them employable and knowledgeable. It is our intentional way of creating awareness of the insurance profession to the young people. We are continuously looking for hosts that can give the young people workplace experience. And here we're talking about real doing of the work. At the end of the program, the young people get to prepare a portfolio of evidence. So they need to show that they have acquired the experience in line with the academic standards. So if you are an employer on the line, or you think that your employer would be interested in participating in this type of an initiative, please reach out to the office. There is just a lot that we need to do to make sure that as the older generation exits, there is a pool that can take over. So please reach out to the office at communications@isa.co.za, or you can reach me at Thokozile Mahlangu at iisa.co.za, or you can reach Dumisang, who runs with the program. He is at dumisang at iisa.co.za. I cannot overemphasize the importance of having hosts that give these young people workplace experience. And above that, we are continuously in need of employers that can absorb the young people at the end of the program. A big thank you to the hosts that have made themselves available for cohort 2, which is coming to an end towards the latter part of the year. If you're still available to host the young people or even consider absorbing them, please reach out to the office. We will be more than willing to align or allocate some of the young people to your organization. I cannot close, of course, without inviting you to become a professional accredited by the ISA. This is something I say every month on this platform, and I'm sure you know that I wasn't going to say goodbye without inviting you if you're a non-member. And I'm not talking about being a general member or being a CPD affiliate. I'm talking about being an accredited professional, a designated professional, a licentiate, an associate, or a fellow. take the time and elevate your standing in the industry and become the professional that is accredited by a SAQA-approved professional, the Insurance Institute of South Africa. Until next month, goodbye. Thank you.
AIE 2024, the 50th conference we have been celebrating. Thanks to everyone who took the time to join us as we celebrated this jubilee. The registration for AIE 2025 is already open, and with this year having set a tone of what we did, we look forward to crafting another unforgettable experience that you will have. So take the time to register. 27th to 30th July 2025, we will be back here at Sun City celebrating yet again AIE 2025. See you there.
Okay, now next up we have our other regular insert. It's one of the inserts that I look forward to every month, and that is Rianette Whitehead. She is the co-owner and editor at FA News, and she's the mother of the insurance apprentices, the work mom. And every month, Rianette gives us a media update, and she does a superb job of it. And after Insure Talk, you know what's going on in the media, in the insurance and financial services industry in South Africa. I just wanted to also, on this very special occasion of our 5th birthday, give a special shout out to Rianette. She does unbelievable work in making sure that voices are heard in this industry. I speak from personal experience because, you know, we're a little startup and we get the same kind of opportunities that some of the big brands get. So there's a lovely balance of youngsters versus experienced people, new brands versus older brands. And then, of course, we have the wonderful Insurance Apprentice to look forward to on SABC3 coming to your screens soon. So, Rianette, tell us a bit more about what's happening in the media in South Africa's insurance industry.
Good morning, everyone. It's such a pleasure to be with you again. And before I get started, I want to take a moment to say a big congratulations to Insure Talk for reaching a major milestone, 5 years. It's hard to believe this initiative was born during the chaos of COVID-19. And yet here we are, 5 years later, still connecting, learning, and growing as an industry. That kind of staying power says a lot about the relevance of this platform and the hunger in our industry for meaningful conversations. As you know, at FA News, we receive a constant stream of press releases, updates, and opinion pieces every day. It's a front row seat to the heartbeat of the financial services and insurance industry, and I'd like to share some of the most prominent themes we've seen in the last few weeks. First, there is a focus a renewed focus on underinsurance, especially in the wake of disasters like the KwaZulu-Natal floods, with only half of the 54 billion rand in damages reportedly insured. It's a stark reminder of the coverage gap, particularly for vulnerable individuals and communities. It's an issue that won't go away and continues to fuel so many industry conversations. Another hot topic is the rise of technology. Yes, and don't roll your eyes, particularly AI, automation, and their growing role in underwriting, claims processing, and fraud detection. While these tools bring speed and efficiency into the forum, they also come with new risks. We're seeing a concerning increase in AI-powered fraud, things like deepfakes and digitally manipulated documents, forcing the industry to up its game in detection and risk management. Regulation remains firmly on the radar too, as always. The COFI bill continues to spark dialogue with professionals dissecting what it means for compliance, transparency, and most importantly, the future of advice. At the same time, the National Health Insurance Act is making waves. The concern is the execution. It has raised eyebrows, especially around affordability, infrastructure, the lack of clarity about how private sector partnerships will be handled. From a consumer behavior angle, there's been a lot of conversation around insurance accessibility and affordability. Touching on my first point, penetration remains concentrated in the higher income bracket, with many South Africans either underinsured or not insured at all. Price sensitivity and product understanding remain key barriers, and there are a growing call for more inclusive product design and simpler communication. And what I referred to in my previous Insure Talk session was the trust issue that we really need to work very hard on. Despite all these challenges, there is definitely a sense of resilience in the market. The short-term industry space has bounced back strongly, with some insurers reporting over 50% growth in profits, according to the latest figures we've seen. This rebound speaks to risk management, price corrections, and operational agility, something we should be proud of, and hopefully also all valid claims paid. There's also a growing interest in specialist risks, from climate change to cyber threats, and how we as an industry respond to them. These aren't future problems anymore. They're here, and the pressure is on to build resilience into our product offerings, risk models, and client engagement strategies. Speaking on conversations and staying current, if you haven't yet tuned into TIA Talks, that is the podcast series under the Insurance Apprentice banner, go and have a listen. Our host, Jason Meisen, a broker himself, is phenomenal. And we've really been talking to industry experts and TIA alumni about everything from mental health and resilience in the workplace to technology and AI and the future of financial advice. We even covered intergenerational wealth transfer, talent retention, and how to keep the industry exciting for young professionals. The episodes are short, real, and insightful, just how we like it. So whether it's regulation, resilience, innovation, or inclusion, these are the conversations that keep showing up in our inbox and on our radar. And while the topics evolve, core challenge remains the same. How do we as an industry stay relevant, client-focused, and forward-thinking in a world that's changing faster than ever? Before I end my session, a stark reminder to please do your CPD hours. I know this has been repeated numerous times, but from FA News side, I would just like to ask people who are on our system. We have 34,000 users. inevitably that means that the system slows down in the last 2, maybe 3 weeks of May. If you do not want to speak in foreign languages and you don't want to be frustrated to your core, please complete those CPDs on the FA News system by, I would say, the last week, the first week of May. If you can be done in the first week of May, you're probably still fairly safe. From then onwards, it's going to be a little bit downhill. So do not do that to yourself. Don't be frustrated with yourself, because you cannot be frustrated by us. We are delivering a service. We get phenomenal feedback about our content. It is the go-to platform for many, but make it easy for yourself. We as FA News have also recently launched our new website, exactly on the same day that we turned 27 years old, something we're exceptionally proud of. The new website is much more in line with current trends and also user-friendly on cell phones, more than it has ever been. So if you haven't looked at how to visit our latest new website, please go and take a turn and visit the website. There is most certainly some exciting developments on the Insurance Apprentice side, and I am so keen to share the news, but I'm going to do that in a little bit more of a special way on our TIA platforms. So it's official and the news is out, so please have a look out for the news on the TIA platform. It really is super, super, super exciting. We have really gone all out this year with the season. It is on television. We want to make sure that when viewers watch the Insurance Apprentice, for the first time, they get a bit of a positive vibe about the word insurance. And there's going to be drama. It's going to be really gripping. It's going to be worth it to watch. And there's some phenomenal content. We've really created some amazing episodes. So I cannot wait for the season to start. And I hope you can't wait either. It will be on SABC, but we will also share it on our usual social media platform the following day. If you don't want to stay behind, watch it when it's live. Otherwise, just a follow-up over the weekend on our socials, and we'll give you a nice idea. There's some cool prizes. Vote for your favorite contestant and win 50,000 Rand. And then per episode, you can, as a viewer, you're competing with the SABC3 audience. You will be able to win 5,000 Rand cash. So for those who are keen on a little bit of an extra buck, make sure you tune in when it's time. I will share that soon on our platform. Thanks for tuning in today. And as always, if you want to stay ahead of the game, make sure you subscribe to the FA News newsletters. Follow us, that is FA News and the Insurance Apprentice, on LinkedIn, Facebook, and Instagram. We are also going to have 2 webinars before CPD deadline is over. The one is an AI Future of Insurance webinar sponsored by Sapiens, and we have, amongst others, a speaker from Microsoft, which is really cool. And then we also will have a webinar on climate change. And then we will have a amazing cyber webinar where it's a lot about the practicalities around how you can protect yourself and your clients. So this is something you can also typically share with clients to tune in, because it is gripping stuff. It's scary. It is really interesting. So make sure you have a look out on when those webinars are. We've sent the invite for the Sapiens one already, but all the banners, all the info is also on thecalendar.org.za, which is the platform where you should go for all your events. Thank you for listening to me. Enjoy the rest of your session. And once again, happy birthday, Insure Talk, for a phenomenal platform. Until next month.
And now we're on to our entertainment section. Speaking of entertainment, we've got a few very interesting little videos coming up later of our birthday wishes. It's a highlight of our year, and the Insure Talk team here get very excited about the videos that we receive. So something very exciting to look forward to. Now, we've got a few traditions here at Insure Talk, and one of them is the highlighting and supporting and magnifying the incredible talent we have in the entertainment industry in this country. And our entertainment slot is proudly sponsored every month, supported by the Business and Arts of South Africa, BASA. This is an organization that's been around since 1997, and it's a joint initiative between government and the private sector. And BASA is dedicated to fostering beneficial partnerships between the business community and the arts. Now, many of us have a very big heart and support of the arts, and that's one of the reasons why we are very grateful to BASA for doing this for us each month. And we have such a wonderful performer, a special one this month. Leah Marie is a South African musical theatre performer. She's a writer and a composer. I love Leah because she has the same name as my daughter as well, so there's that. She's born in Durban to jazz musicians, grew up in a jazz family. She grew up immersed in music and later trained at Lamta in Cape Town. She's known for lead roles in The Sound of Music and My Fair Lady. I've seen Leah perform. Can't believe we're going to see her on the show this month. If you missed My Fair Lady, I'm sorry, but you missed something really absolutely incredible. I enjoyed that so much. And she was also celebrated for her original queer-themed musical, Call Me a Fool. She's a recipient of multiple scholarships and a mentorship from Janice Honeyman. Leah is celebrated for her emotional depth and commitment to authentic storytelling. And in 2025, she was nominated for the Fleur de Cap Award for Best Performance by a Lead Actress in a Musical or Music Theatre Show for her portrayal of Eliza Doolittle in My Fair Lady.
Hello everyone, my name is Leah Mari. I'm 23 years old and I am a singer and musical theatre actress as well as a screen actress. If you saw the productions My Fair Lady and The Sound of Music, you might have seen me in those. And I'm so excited to be here with Insure Talk for their birthday. Round of applause, we love to see it. Today I'm going to be singing two of my favourite songs from my favourite projects, my favourite artists, and I can't wait to sing for you. First up here is a song by Adele.
When the rain is blowing in your face and the whole world is on your case, I could offer you a warm embrace to make you feel my love. When the evening shadows and the stars appear, there's no one there to dry your tears, I could hold you for a million years to make you feel my love. hungry, I'd go black and blue. Oh, I'd go crawling down the avenue. No, there's nothing that I wouldn't do to make you feel my love. The storms are raging on the rolling sea and on the highway of regret. The winds of change are blowing wild and free. You ain't seen nothing like me yet. I could make you happy, make your dreams come true. Oh, nothing that I wouldn't do. Go to the ends of the earth for you to make you feel my love. To make you feel my love.
That was Make You Feel My Love by Adele, and it's one of my favorite songs, and one of my favorite projects is The Greatest Showman because of how it uplifts and how the messages of how it makes everybody feel like they have a place, they have a home, and that's something as an artist that I love to feel, that I love to explore. And so naturally, the next song that I'm going to sing for you is A Million Dreams.
I close my eyes and I can see a world that's waiting up for me, that I call my own. Through the dark, through the door, through where no one's been before, but it feels like home. They can say it all sounds crazy. They can say I've lost my mind. I don't care if they call me crazy. We can live in a world that we design. 'Cause every night I lie in bed, the brightest colors fill my head. A million dreams are keeping me awake. I think of what the world could be, a vision of the one I see. A million dreams is all it's gonna take. A million dreams for the world we're gonna make. There's a house we can build. Every room inside is filled with things from far away. Special things I compile, each one there to make me smile on a rainy day. They can say it all sounds crazy. They can say we've lost our minds. See, I don't care if they call us crazy. Run away to a world that we design. 'Cause every night I lie in bed, the brightest colors fill my head. A million dreams are keeping me awake. I think of what the world could be, a vision of the one see. A million dreams is all it's gonna take. Oh, a million dreams for the world we're gonna make. However big, however small, let me be a part of it all. Share your dreams with me. We may be right, we may be wrong, but I want to bring you along to the world I see, to the world I close my eyes to see. I close my eyes to see. 'Cause every night I lie in bed, the brightest colors fill my head. A million dreams are keeping me awake. I think of what the world could be, a vision of the one I see. A million dreams is all it's gonna take. A million dreams for the world we're gonna make. A million dreams for the world we're gonna make.
Thank you so much for spending some time with me today. I had so much fun being at this session for Insure Talk on their birthday. And speaking of birthdays, we have a very exciting lucky draw. 2 tickets are going to be won today. You've all been entered into a lucky draw, and the tickets are to come and see Chicago the Musical, which is my next project that I'm very excited to be a part of. So I hope to see you there, and good luck to the lucky person who wins. If you'd like to follow me and see what I'm up to every now and again or every day, you can follow at leah.mari on Instagram, leah.mari. I'd love to have you, and once again, thank you for having me, and happy birthday.
If you are not proud after that, I don't know what can make you proud to be a South African. Now, one of the other things in our industry that I have got a very long relationship with and that I'm also very proud of is it's our various institutes around the country, the people who serve on these councils, and it's a thankless job. You don't get paid for it. You have to give a lot of time and get criticized for not delivering properly. I speak from experience because I spent 11 years on council of the Insurance Institute of the Western Cape. I'm a past president. It really was one of the best times of my life. I absolutely enjoyed my time on council. And we're going to use this slot just to give you a little bit of an update of what's happening in the Western Cape. Now, the Insurance Institute of the Western Cape is the oldest one in the country. It all started here. It used to be called the Insurance Institute of the Cape of Good Hope. And it's also the second biggest one after the IIG. We appreciate you so much for joining us today and providing the speaker lineup. Thank you.
Hi, Crystal. Oh, thank you so much for the warm introduction for IWC. Thank you so much for inviting us to chat today. I'm so appreciative, and thank you for your time serving on council. It has been a phenomenal journey thus far, and quite fulfilling to walk in your footsteps as well. So Insure Talk, it's your 5th birthday. Congratulations. I'm so proud of what you guys have done over the past 5 years, and the amazing content that's come brought to us in our very homes and in our offices. So thank you for that. Yeah, I thought I'd quickly just chat about our initiatives for 2025. I'm Sean J. Stemmers, the president of IWC. I serve on a very passionate council. All of our council members are active members in the short-term space, so they are literally sitting among us and doing the things behind the scenes to make things happen. part of what we do is engage with our members and do amazing work for our charities. And in the past, we've been so fortunate with all our initiatives to raise funds to support these charities. And I quickly want to chat about who they are and what they do. So we've got Saki Bartman for the abused women and children. We've got Nzananda Animal Clinic. We've got Percy Bartley House, and then we've got the Message Trust. And the Message Trust is a fairly new charity which we brought on board 3 years ago. And they look after previously incarcerated individuals, and they do job readiness programs. They basically reintroduce them into society, but make sure that they are prepared for society and be part of our workforce. So they do phenomenal work, and we've got such a great partnership with them. Percy Bartley House, we had a fantastic Easter initiative for them last week. 2 weeks ago, Santa Marine sponsored our beach cleanup, and everything that we raised right there was for their Easter festivities on Saturday. So we put out a beautiful spread for them, and thank you so much for everyone that was involved in that. Nzananda, we've also walked a very long journey with them, and they do phenomenal work in the community. So they set out in Kailicha, and they look after all the animals, the stray animals, and take them in and take care of them. They do a lot of work for the community, and we're very grateful to be part of the charity. So Saki Bartman, that one, I hold it very close to my heart. Last year, part of our under 35 project was to rehabilitate the playground area for the children. And we set out there in our gear, and we started painting and organizing the playground. We built new swings. And part of that partnership is that we had an external company that came to do the touch-ups, because, insurance is where we specialize and it's not necessarily painting. And they came to do a couple of touch-ups on the playground just to make sure that we handed over a good finished product. And they came to us afterwards, and they're like, we love the work that you guys do. How else can we get involved? And they actually partnered with us to kit the boys out at Percy Bartley House with new sporting equipment. So these are the kind of things that we thrive on, our partnerships and leveraging these relationships to make a meaningful impact, not just in our space, but outside of our space, in the very communities that we live and serve in. So that's been a really big focus for us, and how we can give back further to our charities beyond our webinars, our awesome events, which I'm going to unpack shortly. But yeah, so that's been our focus so far for 2025. I really want to share some of our events highlights for 2025. It's really cool stuff that we brought to the table. Kicking off, we've got our annual IWC Golf Day, which is hosted at Westlake. Everybody loves the course, and we just keep on going back for more. And we use that to drive a pet food donation for Nzananda House, Nzananda and Animal Clinic. Later in the year, still talking about golf, we have our prestigious Arabella Golf Day, and that's happening in October. And we've got people from all over the country that flies in to join us on that day. So it's a really good event, and it's an overnight stay, and the next morning everyone gets together and have breakfast. So it's an awesome idea to bring all the sponsors, brokers, insurers, and other service providers together into one room. We've got our quiz night. So you've called and we've answered. The quiz night is back, and we are hosting that in May as well. What is exciting and new, and something that we've done in the past, and we haven't done it in a long time, so I'm really excited about this one. We're hosting our own insurance conference here local in Cape Town. So that will be kicking off in July this year. What's also new to our calendar is our paddle competition, and this is just the new fad, and we want to bring it down to the Cape. So that's happening also this year. And normally in September-ish, we have our Action Soccer Day. So the women's been a little bit upset with us and said, hey, we also want to get involved. We're not so good at soccer. What can we do to get the women involved? and we've changed it up, and now we're going to be playing action netball. So I'm quite excited for that one because I used to love netball when I was much younger. So I'm going to brush up on my skills. What we did last year is we piloted our Africa covered trip, and then we covered the two countries, which was Rwanda and Kenya. And this year we will be going to Ghana. So that's our partnership with Cover Publishing. And we'll be sending a group of delegates to attend that trip and write back our research paper and put that together out to market so that we can share all our insights with you. This year, as well as InsureTalk's 5th birthday, we have our 5th installment of our RISE program. So that's our mentorship program. Hosted by and facilitated by Linda Coetzee and Associates. Linda and Jenna do a phenomenal job with the mentees and mentors. So we're very, very proud of where we've come and how we've grown in terms of size and just the amount of knowledge exchange. I know Christelle's been very active in that program, and Terina, thank you so much. And those are our past presidents. So they're really, really giving back to our local market here. Thank you for that. The biggest ticket item on our list is our gala dinner. So this year it is at a new location. I can't reveal anything yet, but we will be sharing some teasers quite soon. And that's basically what we've got on the line for 2025. That's slightly wide of our usual stuff. And I'm hoping that all the members are going to attend these things. We really want to get to know each and every single member. What we do is very important. We want to hear your voice. We want to get to know you a little bit more intimately and what your needs are. So I'm looking forward to seeing more faces at our new initiatives. And none of this can be done without our partners, which is our much needed sponsors, and we appreciate them. And thank you so much for always partnering with us and collaborating on new ideas and putting these new initiatives together. And thank you for coming to us and saying, hey, we want to do these things. Can you partner with us? Can you make this happen? So our partnership and our sponsors are very, very important to us, and we hold that very close to our hearts. So thank you for everything that you guys have walked this journey with us thus far, and we can't wait to put our best foot forward. So thank you so much, and you guys must have a good week. Goodbye.
Okay, now today we have someone from behind the camera actually coming to in front of the camera. He's done it a couple of times before. He's the brainchild behind the Insure Talk, Llewellyn du Plessis. He's going to tell us a little bit about the Insure Talk journey, and he's going to tell you how to partner with us. If you want to speak to the most influential audience in the insurance and financial services industry on the African continent, this is where you can do it. And it's actually quite, it's not that hard, you know, it's from the comfort of your desk. You get to speak to 4,000 to 5,000 very influential people. Now, Llewellyn is a partner at CN&CO events, and he is also the head of events, organizing some of the most incredible events around the country in our industry. You wouldn't know it because he's always running around behind the scenes, making absolute magic happen. So Llewellyn, tell us a bit more about this journey of Insure Talk on this very special day, your 5th birthday.
Thank you so much, Christelle. I'm not normally one in front of the camera, but here I am today, as it is a very special episode for us. Thank you very much to each and every person joining for Insure Talk over the last 5 years. I can't believe that we are here, 51 episodes, 5 years later, something that started out with 80 people, now over 4,000 people that subscribe to it monthly. Thank you so much to each and every sponsor, as well as to each and every one of you joining for these 3-hour sessions each month. To the wonderful team at CN&CO, Carl, thank you so much. Fransha from our design team, Verona that manages the speakers, and the rest of the team behind the scenes that make this really special each and every month. Thank you so much for all of your support and helping us bring amazing insurance content to the screens of thousands of people across the world. We don't actually only have people from South Africa, so Insure Talk is not only South Africa's biggest online conference, but probably Africa's biggest online insurance conference, as we have many people joining from across the world and Africa on a monthly basis. Thank you to all of our sponsors. Without the sponsors, we can't make this happen. We can't bring free content to any of you each month if we don't have the support of the various sponsors and the speakers. And talking about speakers, thank you for taking the time, the effort to prepare these sessions, and also making time in your schedules on the day of Insure Talk to present during this time to all of our attendees each month. I just want to say thank you for all the support, and by also saying thank you, it is now time to make sure that you're CPD compliant. The time is almost up. We are getting towards the end of the cycle. The cycle ends on the 31st of May, so please make sure that you don't leave it just up until the day before that. The system will get slower as we have thousands and thousands of South Africans currently trying to scramble in a year's work into a day. So please make sure that you go to insuretalk.co.za to view these sessions. All of the previous sessions are available on the portal. You can view them, answer the short quiz, and immediately download your certificate from there. Also, if you do need any assistance with regards to the system, please email me. I will pop my email address in the chat box as well. But it is very important. A lot of people forget how to log into the system and then they can't get access. The system generates a password and instructions to the email address that you use to register when you first watched Insure Talk. If you did watch Insure Talk on an old company email, please get in touch with us if you don't have those login details anymore, and we'll have to help you update that. If you do have access to this portal and this email address, please just select on Forgot Password and it will reset your password for you. Please try this. Otherwise, get in contact with our team ahead of schedule, please. Please don't ask us on the 31st of May, I need it on the 1st of June. That will be difficult. So please get in contact if you do need any help with us. And as I mentioned, all of these sessions are available online for you to watch and earn these CPD points each month. Also, while we are on CPD, thank you so much to the ISA, to Kuzile and the team they've been supporting us from the first day of Insure Talk, when we brought almost one of the first insurance webinars to your screens across South Africa, and they've accredited all of our sessions up until now. So really, thank you to the ISA for accrediting Insure Talk each month, and without that, you guys won't be compliant, and we also make it sure that we bring Insure Talk to your screen so you can watch it whenever you want to, wherever you are. I mean, Carl, one of our team members, he's watched Insure Talk and stayed CPD compliant from the back of an Uber. So if he can do it, any of you can do. So with that, I just wanted to say a big happy birthday, Insure Talk. Thanks for all of your support, and we hope that there are many, many years still to come. Thank you so much, Christelle. Over to you.
Okay, now on to a more serious speaker for the day. We've got Ari Saili. He's going to talk to us about meeting disability. That's the topic of the talk today. Ari is a member of the Presidential Working Group on Disability. That's quite an honor. Executive member of the South African Disability Alliance. Executive member of Quad-Paro Association of South Africa. I'm sure we've had Aria on the show before. Now that I remember, yes, that's right. I really enjoyed your talk, Ari. So welcome back to Insure Talk. And also an executive member of Epilepsy South Africa. Ari has got a long and storied career with a very extensive bio, but I think it's important to mention that he has published his book, his autobiography that has just been published, Wheels of Fire. He matriculated at Hilton College. So he's a Hilton boy, studied for a short period at UCT after his national service. And from there, he carried on and did amazing things over a lifetime of wonderful achievements. And as I said, Ari is going to talk to us about meeting disability, something that I think a lot of us actually don't know enough about. So very informative topic up next.
Good morning, everybody. First of all, I think it's damn unfair that you put us after Leah, because none of us that have spoken after have got many singing skills, and she was just mesmerizing. And I doubt whether I'll be as mesmerizing as her, but I'll give it my best shot. First of all, let me say congratulations on your 5th birthday. Yes, I have spoken before, but my subject material today is quite different. I'm going to give you a crash course on disability, so call it Disability 101. This is how you're going to earn your CPD points. Don't think that by participating in some of the programs, they call it Wheelchair Wednesday, Dining in the Dark, or running with your earpods is going to give you any idea of, oh, I know what it's like to have a disability. And there's a lot to learn about the life and lifestyles of a person with a disability, as well as the unintended consequences of having a disability. Allow me to introduce you to disability, beg you to take the insuring, the assuring, and the cover of disability very seriously. And then I'll tell you a short story of hope and opportunity. So I've got 30 minutes to influence you and to tell you a story and to give you a quick crash course on disability. While I'm sharing my screen, just in terms of housekeeping, sit back and relax, don't take any notes. And I just want to say a shout out to Peter or Vimpy from Global Choices for giving me this opportunity and the stage, for which I'm very grateful. So thanks. Just in terms of housekeeping on my side, if someone, Verona, can give me an indication if I lose signal in any way, then I'll change to another Wi-Fi setting. But from participating earlier this morning, it looks like we're all good to go.
You are 100%. Thank you, Ari.
Okay, thank you. Okay, so just a quick heads up, everyone, can you see my slides?
Yes, we can. They are lovely. We're
okay, thank you very much. So there's the, I'm going to move swiftly through this. And some of it's a bit technical. And you can see the mood of today is everyone celebrating. You don't really want to be taking too many notes, and you don't want a technical presentation. So I'll make this available to everybody, and I think it's a good resource to have on file if you want reference to particular legislation. So I'm going to move swiftly through this so that I can get to some storytelling. I'm going to talk about the definition, different types of disability, myths, manners, do's and don'ts, reasonable accommodation, the disability value proposition. Okay, understanding disability, it's critical to understand that the disability are imposed by society when a person with a physical, psychosocial, intellectual, neurological, and or sensory impairment is denied access to full participation in all aspects of life, and when society fails to uphold the rights and specific needs of individuals with disabilities. Persons with disabilities experience 3 types of interrelated barriers. The first is social, including high cost, and I'm going to go to that just now. Lack of disability awareness, and we're talking about that now, and communication difficulties. Psychological, such as fear of personal safety, and structural, including infrastructure, operations, and information. So let me, in a nutshell, tell you what we embrace, we as people with disabilities embrace the definition of. Disability is a combination of your health condition and the environment within which you live. Forget about what the employment equity says about the definition. We are as disabled as how the infrastructure allows us and how society sees us. That's very critical. So, quick slide. The different types of disabilities and health conditions. You get physical, which is your quadriplegia, and just to mention, I am a quadriplegic. Paraplegia, spina bifida, muscular dystrophy, post-polio, amputee, short stature. Psychosocial, that affects the brain, is bipolar, post-traumatic, eating disorder, personality disorder, intellectual, cognitive functioning, that's Down syndrome, neurological, your nervous system, epilepsy, autism, dementia, Alzheimer's, strokes, Parkinson's, MS, motor neuron, and cerebral palsy. Sensory, deaf, that's small d, deaf being the big D, that is if you're born deaf, and hard of hearing. And then sensory, which is visual. So let's talk about terminology. I'm afraid to say that we in the disability sector, we got plenty of K words. Plenty of K words, which we can't take you to court for because we're not taking that seriously. But here's some advice. Say the word. We are people with disabilities, and sometimes we are disabled people. We are only disabled by the environment within which we operate. So the word to use for us is we are people with disabilities. The word people first. So we're not physically challenged, differently abled. There are so many words that people use to refer to people with disabilities. And they're all wrong, except if you use the word people with disabilities. So a person with cerebral palsy not suffers from or is afflicted with or a victim of. I use a wheelchair and I'm a wheelchair user. I'm not wheelchair bound. I'm not confined to a wheelchair. If you want to bind me on a wheelchair, then get a rope and tie it around me, and then I'm wheelchair bound. But in the meantime, I use a wheelchair for my mobility. And then the word disability or disabilities is the appropriate word, not handicapped, crippled, physically or mentally challenged. And then we like to be referred to as a client, a customer, a guest, or a consumer, not a patient or an invalid. I think that's a really significant slide. The myths, manners, do's and don'ts. Words are very powerful as they convey attitudes and can have a positive or negative impact depending on how they're used. When referring to someone who has a disability, always refer to the person first and then the disability. So I am a person with a disability. We are people with disabilities. We own a disability. They do not own us. Never refer to a person's disability unless it's relevant. Treat people as individuals, not conditions, with their own mixture of abilities and disabilities. Don't make the assumption about a person's level of knowledge and understanding, and do not assume or guess what the implications of an impairment are. Rather ask and find out. So reasonable accommodation, quite often it's the real irritant of employers. And so let me define reasonable accommodation according to the Employment Equity Act. Very simply, it's any modification or an adjustment to a job or working environment that will enable a person from a designated group to have access to participate in or advance in their employment. A reasonable accommodation is assistance or changes to a workplace, to a position or workplace that will enable an employee to do his or her work and job despite having a disability. And under the Employment Equity Act, employers are required to provide reasonable accommodations to qualified employees with disabilities unless doing so would pose an undue hardship. Now, I use the word qualified. That's another thing, is that you've got to try and encourage your employees with disabilities to disclose so. And there are lots of people that decide not to disclose they have a disability. They feel that they might be discriminated against in the workplace. But if you want to tick your scorecard, your BBBE scorecard, you really want to try and encourage people to put their hand up and say, I'm a person with a disability, although it's not obligatory to do so. So some examples of reasonable accommodation is adapting existing facilities to make them accessible, adapting existing equipment or acquiring suitable equipment, reorganizing workstations, changing training and assessment systems, restructuring jobs so non-essential functions are reassigned, adjusting working time and leave, providing sign language interpreters, providing specialized support and work from home. Just on the providing sign language interpreters, there is no law that says that you have to. And at some stage, anyone can consult me and I'll give you some creative ideas about how you can integrate sign language into your workplace. Unjustifiable hardship. An employer may plead unjustifiable hardship on the business. Unjustifiable hardship is an action that requires significant or considerable difficulty or expense that would sustainably harm the viability of the enterprise. This involves considering the effectiveness of the accommodation and the extent to which it would seriously disrupt the operation of the business. So just to know that there are two documents that you would use to assist you. There's the technical assistance guideline, and that's different from the code of good practice. So those are the two different ways that you read them in the workplace. Yeah, you know, that's the ultimate reasonable accommodation. I want to talk to the slide, a bit fuzzy, difficult to expand it without it getting fuzzy, but there's a difference between exclusion. You can see the wheelchair user, let's take that as an example. On the outside, segregation, you know, that's their group, your group, and their group. Integration, yes, we're inside the bubble, but not quite. But inclusion, that's what you want to be aiming at, is the slide that represents inclusion. Okay, I want to get to a bit of legislation. Can get a bit technical, but I'll try and ease you through this. The Bill of Rights, that's our Constitution, Chapter 2 says the state may not unfairly discriminate directly or indirectly against anyone on one or more grounds, including race, gender, sex, pregnancy, marital status, ethnic or social origin, color, sexual orientation, age, disability, religion, conscious belief, culture, language, and birth. And so then you get the Equality Act, PEPUDA, and no person may unfairly discriminate against a person on grounds of their disability, including denying or removing from any person who disability any supporting or enabling facility necessary for their functioning in society, failing to eliminate obstacles that unfairly restrict persons with disabilities from enjoying equal opportunities, or failing to take steps to reasonably accommodate the needs of such persons. So if there's a piece of legislation that we people with disabilities go to, it's the Equality Act. Beware, yes, but we haven't been very successful using the Equality Court with this piece of legislation. So many people have got away with discrimination against people with disability. The Equality Acts, the Equality Court hasn't been successful for us. The legislation that governs the design of infrastructure and buildings that's relative to us is SANS 10400 Part S, which is brought into the National Building Regulations, and that talks about all the specifications you require when you design a building. Unfortunately, we feel that it's really entry-level standards, and we hope that they'll be adjusted quite soon. Okay, I'm going to talk about the UN Convention on the Rights of Persons with Disabilities. This was ratified by the government. It's been superseded by the white paper on the rights of persons with disabilities. So I'm not going to labor on about this, but the article that is really important, Article 9 on accessibility, and that speaks to enabling people with disabilities to the physical environment, to transportation, to information and communications. You know, a lot of people think that if you want to design around people with disabilities, you just have ramps and toilets and you're A-OK. There's so much more when it comes to that. I mean, we need access to buildings, roads, transportations, indoor and outdoor facilities, including schools, housing, medical facilities, and workplaces. Information, communications, and other services, including electronic services and emergency services. So Article 9, it speaks to accessibility in the UN Convention on the Rights of Persons with Disabilities. Article 27 is work and employment. So I'm going to skip through this quickly, but if you want to just take note of Article 27. And then the document that guides government now is the White Paper on the Rights of Persons with Disabilities, where they took the 50 articles of the UN Convention and integrated them into 9 pillars. And this is the document that's going to be used and that is being used presently for the draft Disability Act. So I'm announcing now that we're hoping this year, but I doubt it, that probably by next year, there will be a standalone Disability Act promulgated. And we believe it will be powerful. It won't be intimidating, but it'll encompass all the elements, the 9 pillars of the White Paper on the rights of persons with disability into legislation. Okay, so just how to manage persons with disability in the workplace and how and where to find people with disabilities to integrate them into your workplace. The first go-to place is the disability sector, is get to know who the disability agencies are and invite them to put their CV, you know, their members' CVs forward, and you'll be surprised the talent that there is out there. Use specialist recruitment agencies. Be very careful about how you word advertisements, and take note there are new employment equity targets at the moment. I think they talk about the target, if you have a company that employs more than 49 employees, you need to achieve a 3% representation of persons with disabilities. It's difficult. It's very difficult. But at the same time, if you engage with disability agencies, I'm sure they'll help you with some good talent. How to manage disability in the workplace? Please bring sensitization into your workplace. Have a universal access audit done of your workplace. Make sure your evacuation procedures include people with disabilities. When you appraise someone on their job, don't appraise their disability. You're not hiring disability. You're not hiring conditions. You're hiring talent. And so often someone will say, oh, you've done so well, considering you have a disability. That's not the way to appraise somebody. And then work on your retention policies of how to retain your persons with disability in the workplace. Quite often, people with disabilities have had no workplace experience, and that's critical. And so I'm not saying be soft or be patient. I'm saying make sure you have and apply some retention policies. Give people with disabilities an opportunity to progress in the workplace. Listen to their story. People with disabilities have got amazing stories of resilience and how to get from when you became a person with a disability to the door of the workplace. Very, very powerful stories. And then instill confidence in people with disabilities. You will find there are barriers to entry in the workplace. And the first is people that are on a disability grant will be very cautious to give that grant up in case they don't succeed in your working environment. So just know that is a barrier to entry. And then people with mobility impairments will more than, if they don't drive themselves, they will have transport problems. There's very, very few accessible transport systems in the country that go from door to door or that have a large footprint. And then, of course, accommodation close to the workplace is very challenging for people with disabilities. And so I've got to end off this this part of my talk, your crash course, by saying there's a big value proposition employing people with disabilities. Staff with a disability demonstrate high levels of loyalty. The level of employee turnover for people with a disability is low, and the retention rates are high. On average, staff with disability have productivity rates comparable to other employees. Organizations that employ people with disability are often regarded by their employees to be good employers. Employing people with a disability has shown to build staff morale and teamwork. Employing people with disabilities makes a positive impact on your reputation and brand. And staff with a disability have a low incidence of workplace injury. It's providing they're positioned in the right workplace. There's a case study, and I can share on demand with anyone that says that staff's sick book of people that go off with small ailments and take the day off or two reduces dramatically if you've got people with disabilities working in that same workplace. All of a sudden, your headache or your bump or your scratch or your inconvenience doesn't seem so significant when you're working next to a person with a disability. Okay, so this to me is a very significant slide when speaking, especially to this audience. The cost of disability is absolutely phenomenal, from rehabilitation, step down, physio and OT, to retain mental wellness after a disability, the cost of assistive devices, mobility aids, prosthetics, communication devices, adaptations, renovations, home care and support. This is a very significant slide to you, my audience in the insurance field. The cover we did not have is our Achilles heel and our greatest disablement. Then please understand disability risk. It's really important. Give us advocacy to ensure that the PMBs are always adjusted to accommodate health risk when you in medically insuring people with disabilities. Provide vitality programs for people with disabilities. There's very few opportunities in the vitality and loyalty programs out there that people with disabilities can participate in. And then, of course, where's the representation of people with disabilities? Not only in your staff complement, but on your boards, on your influencers. We really need our voice heard to influence the insurance industry and especially the medical aid industry so that they can understand and improve the offering, especially for people with disabilities, who we see ourselves as consumers. And so as important as the previous quote I gave in the last slide, the misunderstanding of disability, many closed participation channels, and lacking advocacy is our Achilles heel and adds to our disablement in society. The last two slides, I think, are probably the most significant in this talk to you on Disability 101. A quick personal story, and I know I shared this in my previous talk a couple of years ago. I broke my neck in a diving accident 41 years ago at Durban's Waterworld. I was young. I'd been to UCT. I'd served in the army in the special forces. I'd run the Comrades Marathon. That's the last photograph taken of me standing before my accident. And I went through a process where I had to find my feet. And that was by putting the why me behind me and not looking for anyone to blame. That was profound. I made sure There was no anger, although that was difficult, very, very difficult. I focused on regaining my status in my family as a son and was desperate to prove independence to my family, who were distraught, anxious, and I'm sure confused as to what their role was in this new journey of mine. I was young and I was restless. I found my what by knowing what I needed direction, whether to be an entrepreneur or to seek employment, understanding that this journey could not be done on my own, and ensuring that I was never going to be a victim of spinal cord injury, nor did I want to be dependent or to be a burden on my family or society. I then set up my home to live independently. Wow, that was bold and a difficult step, but one that was essential in order for me to free my parents from my disability to an extent. I worked out my how, and that was by first using my disability as an asset, making sure that I had a value proposition. I developed some new skills of reading fast and typing fast through voice-activated software, and little did I know that reading at 1,000 words a minute and typing at 100 words a minute would give me a competitive advantage in many environments. I selected the appropriate mobility aids, and according to my roadmap, I learned to drive and now could plan that road trip of life ahead of me. Something was missing, so I eventually decided to venture to a few disability-related meetings and get-togethers. And then I joined the Quadriplegic Association and knew that I found my calling, my why, and my purpose. I served out my career as the CEO in the Quad Para Association of South Africa. And I'll just tell you about a few things. We developed one of the country's most visible road safety programs with the slogan, "Buckle up, we don't want new members." And it was imperative for us to invest in prevention. And I asked the question of all the insurance companies and medical insurers here, please spend some money or have some advocacy in the prevention of disability. It will save all of you and your businesses a lot of money, especially the medical insurers. But also, we provide a tremendous amount of advocacy and lobby to change legislation and create awareness about the injustices for people with disabilities. Just to mention, the Quad Para Association value proposition to all of you, especially in Gauteng, is that we were the second plaintiff, together with OUTA, against SANRAL to stop the e-tolls. And in fact, this picture was taken at the launch of e-tolls many, many years ago, where we burnt a wheelchair. Just as a disclaimer, the wheelchair was a condemned chair. This was on the front page of the Star. And we very proud to say that certainly Wayne Duvenage and I spent 10 years. And the outcome of all of that lobby and advocacy, which was very tough, is that we stopped the e-tolls in Gauteng. Anyway, on my journey as a person with a disability, remembering that the doctor had said to me, you won't do this and you won't be able to do that, and you'll probably be confined to bed for the rest of your life, is that I've traveled all over the world. I rode an adapted Yamaha quad bike, 20,000 kilometers all over South Africa. I've bungee jumped, I've scuba dived, I've water skied, I've painted in acrylic, I've hand cycled the New York Marathon twice, completed 185 park runs, I've learned to play a musical instrument, I've been on a reality show, I got married and divorced, and I'm back on placid waters fly fishing again. In my time, I've had a tiff with FW, I've had lunch with Mandela, I've smoked a cigar with Mbeki, I've danced late into the night with Zuma at a party. I was a member of parliament with the ID, Patricia de Lille at the time, before she screwed me over for a relative. I've drunk whiskey with John McEnroe. I've had some laughs and told some jokes with Robin Williams. I've been on a date on the red carpet with Kim Cattrall from Sex and the City. I've attended a dinner with Travolta. I had a front row seat at Wimbledon, and most interesting, spent a lot of time with the late Christopher Reeve, alias Superman, at his home in New York. He was desperate to walk again, but he never did. My response to him was that it's not about walking, but it's about having the opportunity in life that counted and was more important than walking again. Anyway, as you can imagine, for me, walking is a little bit overrated. We don't want to be fixed, but there is an expectation of being able to acquire skills, employment, enjoy good health and wellness, and most importantly, have an equitable lifestyle and opportunities. And you all play a small part in this. So I'm going to end off by sharing with you a phrase I coined, and it's workplace related, because today's talk was really all about a crash course in meeting disability. And it goes like this. I would rather be in a workplace with someone who is blind and cannot see than somebody that has no vision. I would rather work and be in a workplace with someone who is deaf and cannot hear than someone who doesn't listen. And I would rather be in a workplace with someone who cannot walk than with someone who doesn't walk their talk. So that's it. Peter Wimpy from Global Choices, thank you so much for the privilege of being able to give a talk here on your 5th birthday. Congratulations, and I hope you've learned something about disability, and it's been a great privilege for me. Thank you for that.
Now, I told you a bit earlier today that we've got a surprise for you, something that we all look forward to. I promise you some of the videos are very funny. I don't know which ones are going to be aired today. We've seen some really incredible ones over the years, and we thank you for participating in this wonderful community of insurance professionals. And on that note, we're going to show you some of our best entries of birthday wishes for Insure Talk's 5th birthday.
Happy 5th birthday, Insure Talk. Oh, from a small, humble beginning in the uncertainty of COVID, when our very first artist, Leah, performed, up until now, what it has snowballed into a massive, game-changing platform in the insurance industry. Congratulations to the whole team, and here is to many, many more. Cheers!
My name is Lizelle van der Merwe. I'm the CEO of the Financial Intermediaries Association of Southern Africa. From sparking fresh ideas to connecting brilliant minds, you've transformed the insurance conversation one talk at a time. Here's to your continued growth and impact. Happy birthday, Insure Talk.
Hi, Insure Talk team. Congratulations on 5 very successful years as Insure Talk. Here's to many more years of leading the way and empowering us in the insurance industry and shaping the future of insurance. Thank you for your dedication and passion, and cheers to many more years.
Happy 5th birthday, Insure Talk. On behalf of Old Mutual Insure, we would like to extend a heartfelt congratulations to the team for continuously investing in knowledge and thought leadership. Here's to another 5 years and more of growth, collaboration, and great dialogue. Happy birthday.
Good morning, this is Patrice Moyel from the Visio Fund Management Team. On behalf of all of us, we wish Insure Talk a very happy 5-year birthday and congratulations on the incredible success to date. We wish you much continued innovation and further success, and of course many more CPD points for all of your members. Thank you.
Hi there everybody, it's Nontutsugo Noni Mhlungu here, former host of Insure Talk. I just want to say a heartfelt happy birthday to the Insure Talk family. My goodness, Llewellyn, you and the team have done such amazing work in such a short space of time. It's only been 5 years. And so I'm really excited and looking forward to seeing what you're going to do in the next 5, 10, 15, 20 years even. Continue to make magic happen. Continue to make an impact in the industry. I wish you nothing but the best. Happy birthday.
Congrats to the entire Insure Talk team on reaching this incredible 5-year milestone. Here's to many more insightful sessions. Wishing you all the best from Cloda and the Mulberry marketing team.
Happy birthday, Insure Talk. 5 years on. Wow. What an incredible journey it's been. Kurt here from Gauge Car Hire and of course partner at CN&CO, but just wanted to say thank you and well done and happy birthday. 5 years of growth, 5 years of incredible content, and 5 years of bringing the industry together. Well done. Here's to the next 5, and of course a big shout out to all the partners, sponsors and people behind the scenes that make Insure Talk happen. Happy 5th birthday, and here's to many more to come. Cheers.
Hi, I'm Asya Swole, GM of Sales and Business Development at Fulcrum Collect. Insure Talk, it's been an incredible journey watching you grow into such a cutting-edge and informative platform. Your sessions continue to lead the way in industry insights, and as a proud fan and regular attendee, I've learned so much along the way. Here's to many more years of impactful conversations and innovation in insurance. Happy 5th birthday, Insure Talk.
5 years ago, a little superstar was born, Insure Talk. It's been a pleasure watching you grow and develop and become amazing, the top insurance webinar in the country. And I look forward to many more happy years together. Happy birthday, Insure Talk. And congratulations to the team behind it.
Happy 5th birthday, Insure Talk. 5 years of adding value to our amazing industry, the bedrock of our economy. Congratulations to the team who make this possible every month, and to all of you for pitching up, educating yourselves and strengthening relationships, ensuring that we continue to add so much value to our community and to our clients. Doesn't matter where you are, Insure Talk is really accessible, and I look forward to all of us growing this initiative together. Happy birthday.
Now, no Insure Talk would be complete without having the leading insurance brand in South Africa and on the African continent at our speaker table. And we're very grateful to Santam for joining us today. But more specifically, it's Santam Specialist Risks. This is where the most complicated and complex risks are underwritten and supported in the larger Santam table. And just for a quick overview of what Santam Specialist Risks is all about, they say they provide specialist solutions for a very complex world. Their ability to respond to the evolving risk in the marketplace demands that they think beyond products and they focus on offering practical and sustainable solutions. And on the topic of practical and sustainable solutions, we have the team from Santam Specialist Solutions talking to us about addressing the gap in the mid-corporate property sector. So it's a nice balance today to have a topic on corporate property as well. And Santam, you've been very supportive of us here at Insure Talk. We appreciate you so much for joining us today and providing the speaker lineup. Thank you.
All right, no, thank you. Thank you, everyone. The name is Ches Sarambao, Executive Head of Underwriting and Risk at Emerald. And look, I just wanted obviously to talk. I didn't prepare any presentation. It's bridging the gap in the mid-corporate space. Look, in the last 2 years or 18 months or so, there's obviously a number of our competitors who have sort of withdrawn their capacity within the mid-corporate space. And look, there could be a number of factors. You know, maybe before even engaging in the solution, it would be ideal to sort of give context to possibly, in our view, what has led to the withdrawal of capacity. You know, as insurers, we are faced by a number of challenges. You know, I mean, climate change being one that is in the forefront. You know, if you look at the past 10 years, you know, you can see the number of disasters that sort of happened, you know, across the world, and then, you know, and here in South Africa. You know, one of the things that, look, we used to have the benefit of as South Africa, as a region, maybe if you look at 10 to 15 years back, would be able to say, look, we used to be deemed as a net cat-free zone. You know, I mean, look, when we did our treaty negotiations or discussions with reinsurers, that is one of the things that we used to be very proud of. But obviously, the last 10 to 15 years has shown a different angle in terms of that. And look, you know, which is why, look, you would have an understanding why, you know, the impact of climate change might lead other insurers to sort of move away from the space, which ultimately requires a different view, you know, of assessment. You know, so, you know, at the forefront of it is to say, look, what does the underwriting need to look like? You know, so is the digitalization, you know, a different view, active monitoring of exposures that one will have to look carefully at. So our solution in terms of closing the gap, you know, ultimately will be based on, we have to look at it to say, look, how sustainable is it? And at the center of it, we understand that it has to be a collaboration, you know, between ourselves as the risk carriers, the brokers, and the client. And at the center of the collaboration is the risk management. It is ultimately going to be at the center to make sure that, look, it's sustainable. You know, you don't want to come up with a solution and ultimately a year or two later, you are de-risking, like what we've seen with majority of the other players that have sort of moved away from the mid-corp. And then how have we deemed, or what is our view of the mid-corp? I mean, there's a cap of it to say, look, you know, from maybe 200 to about $1 billion from a total insured value or sums insured. That's what we are deeming as mid-corp. And it will be centered again from risk management and risk engineering. So you will have to scale it. So our position is to say, look, we will be offering 100% capacity because we understand that the broking community or the brokers within the segment are looking for 100% position, because what we've seen in the last 5 to 10 years with the hardening corporate or commercial market is that, look, many insurers have different terms and conditions, you know, whether you're talking grid failure or cyber exclusion. So those have been the limitation. Look, one, we would have our one, the next competitor will have their own one. And it has been quite difficult, you know, from a broker or client, when you ultimately have to put in a number of exclusion to sort of explain what the coverage ultimately needs to look like. So hence why we're saying, look, we are positioned to look at the solution to offer 100%, but the 100% obviously is going to be based on how well the risk is managed. And then, look, we have engineers that are happy to assist, and we'll be sending them out to clients that are happy to work with us. You know, in providing the solution, you know, within the mid-corporate space. But look, it's all fair and square to come up with a solution, but we understand that, look, the sustainability or the long-term view of the underwriting needs to be sustainable. And look, so you have to look at what sort of has led us here. And, look, it can't be business as usual. One of the things is, look, I mean, the underwriting has to look differently. We can't continue the same way where the underwriting decisions have always been evaluated after the fact, because the world around us is ultimately changing. We are all interconnected through supply chains, and we just have to look at what's happening with the tariffs that, look, it has put the world into chaos. So I mean, everyone else, majority of our clients have to look at their supply chain, their dependency, because it has been an issue. So look, it needs sustainability. And, one of the things that one also has to consider is to say, look, in the theme of looking at long-term sustainability from an underwriting point of view, we can look at the major disasters that have happened, maybe in SA. You say whether you're looking at COVID, whether you're looking at the July riots, and whether you are looking at the flooding, that ultimately there have been, outside the traditional risk assessment from an underwriting point of view, they've been external to factors that we usually consider as underwriters, where the biggest concern will ultimately be your fires, or breakdown, whichever aspect you're looking at from an assessment point of view, to say, look, underwriting needs to look differently. Hence why we're saying our solution is collaborative. It's a partnership. We're looking at clients that ultimately are willing to sort out their risk management. The scaling of the 100% solution will be based on how well the risk is managed. Where we are happy to work with clients and help them out. And, on that one of the things that we've done well as group or as Santam, it's in partnerships. Look, we've helped out the smaller municipalities, where you partner up with them to sort of help them out in terms of managing some of the risk, that you move away from the transactional aspect of the traditional insurance. And so, yes, I mean, the solution is there. We're happy to work. We open for business. Again, the emphasis is that, look, the risk management has to be at the center of the solution. Where there aren't any surveys, we are happy to go out there and survey and work with the clients and the brokers, come up with a plan in terms of addressing any risk management issues that we might have. So yeah, I mean, I think that's the solution on our end, that, look, we are open for business. We understand that, look, to be able to step in the space where many players are moving away from it, it needs a different approach. It needs a collaborative effort, which is what we are there for, and we are happy to work with the brokers, because we understand that, look, the dynamics have changed, and maybe majority of our players have ultimately moved on it because climate change has sort of changed the dynamics, or has bring an evolving view to the landscape. The asset concentration in net cat exposures or net cat areas has sort of bring a different evolution to how all of us need to be assessing risk. So the solution ultimately will be based on that, to say, like, it's a collaborative effort amongst all of us, and we are happy to work with clients and brokers, but it needs to be sustainable, to ensure that, look, there's a balance across, the industry. I think that's that on my side.
My husband likes to joke that this is my double teapot position. This is me going, we've reached the end of this episode where we celebrated 5 years of wonderful engagement around this virtual table. I I am beyond honored that I am part of this team, that I get to introduce all these amazing speakers, that we can hear all these wonderful stories, updates, learning, connecting from around the African continent. And we appreciate you, our audience. I mean, we're nothing without people tuning in every month and listening to speaker after speaker on the topic of insurance, investments, life, disability, entrepreneurship, leadership. We have heard the most incredible things. And then on top of it, we have entertainment like Leah today. So I wish to thank you. And I hope you're going to join us again next month. Remember, you can go and register for your Insure Talk sessions up ahead. The dates are all there. You will get your CPD certificate. It's about that time again now. And just for those of you who haven't done the hard yards over the last year, you can go to our website, you can re-watch the shows, and just like that, you will be updated with amazing information and also get those CPD points that we need to close out the cycle. So from everyone who joined us today, from everyone who has supported us over the last 5 years, I thank you and I see you next month.